Hello, today we are going to talk about China stocks. Investors were pleased with China's relaxation of domestic COVID-19 restrictions, and as a result, stocks in China shot up and the yuan strengthened beyond the strong side of the closely watched 7 per dollar level on Monday, reaching their highest levels since September. The blue chip CSI 300 index 399300 gained 2% at the close, while the Hang Seng Index HSI in Hong Kong gained 4.5% to reach its highest level since September 1st. The optimistic mood also helped push China's yuan USDCNH, USDCNY past 7 against the dollar in both onshore and offshore markets. The domestic session saw the onshore yuan close at 6.9561 per dollar, its highest close since September 13th. Other Asian offers, in the interim, expanded their meeting, as financial backers trusted a China resuming would ultimately light up the standpoint for worldwide development and product interest. At the beginning of this week, the China reopening trade continued to gain traction. According to Ken Chung, chief Asian FX strategist at Mizuho Bank, the positive headlines continued to fuel risk sentiment in China. With reference to multiple positive developments alongside a clear path set towards reopening, Morgan Stanley upgraded China equity to overweight. Consumer staples 000932 gained 1.4%, transport companies 000957 gained 3%, and infrastructure stocks gained 5.3% in the mainland market. By the second quarter of 2023, Standard Chartered anticipates that the majority of COVID restrictions will have been lifted, leading to a return to the pre-pandemic trend level of household consumption in the second half. STEC's 9.3% advance in Hong Kong was their longest winning streak in more than a year. On the assumption that China's eventual reopening would boost their revenue, Macau casino operators saw a 12.1% increase. The internet platform companies ought to do better in the near future. According to Grow Investment Group's chief economist, Hao Hong, intuitively, as cases rise, people will choose to stay home to minimize the risks of contagion. The road to reopening may be gradual, painful, and bumpy, according to Nomura analysts, but they are also hopeful. As China gradually eases COVID restrictions, analysts warned of disruptions to the consumption and manufacturing sectors as a result of rising cases, which could further impede business activity in the near future. Gross Hong stated, rising cases will likely arouse confusion, which will in turn cause chaotic expectations and market volatility. The Chinese market's outlook for the long term keeps getting better. After exports from Tangfungiram, the world's second biggest cobalt mine, were stopped for a fifth month. A spokesman for the Chinese mining company said that China's CMOC group might sue Congo's state mining company Gécamines. When CMOC was ordered by a temporary administrator appointed by a Congolese court to run the mine to stop marketing and exporting its production, Tangfungiram Mining suspended copper and cobalt exports in July. According to the government of Congo, it believes that CMOC intentionally understated TFM's reserve levels in order to reduce the amount of royalties it pays to Gécamines.CMOC, which was recently known as China Molybdenum, denies having done as such. Blunders of commodity code at customs caused trade interferences, CMOC representative Vincent Zhou said in composed reactions to Reuters inquiries, recognizing interestingly that products had been upset. Zhou continued, "We will resort to legal actions to protect the rights of the company. We have already filed with government authority to request the correction of such errors." TFM's production and operations were deemed normal by CMOC on October 12. However, logistics and industry sources claim that the mine has not shipped anything since July. Sage Nguyen Bao, the state-appointed temporary administrator of TFM, stated, "Exports are still suspended. The two shareholders need to sit down at a table with us." Gécamines owns the remaining 20% of TFM, while CMOC controls 80% of the company. Zhou stated that CMOC believes the TFM royalty payment issue will be resolved in an impartial and just manner, and has maintained communication with Gécamines. Leon Moine-Cabiena, the Deputy Director General of Gécamines, stated, "We are ready if they want to take this to Court International." He stated, "We as Gécamines are very confident of the evidence we have, and a legal process for us is an opportunity to expose the reality." According to a report published by Xinhua on Monday, Tesla Incorporated TSLA shipped 100,291 electric vehicles manufactured in China in November. This marked the company's highest monthly sales since the opening of its Shanghai factory toward the end of 2020. After the American automaker increased output at the Shanghai plant, reduced prices for the best-selling models, and offered incentives to Chinese buyers. The number represents a 40% increase from October, and an 89.7% increase from the previous year. However, China Passenger Car Association data indicates that BYD 002594 topped all brands with 229,942 electric cars sold in November, including plug-in hybrids and pure electric vehicles. This is 3 times more than Tesla's total and more than double its total. The stock 600 SXXB fell just a little in early trade on Monday, but gains were limited by a rally in mining stocks following a relaxation of COVID-19 curbs in China, a major commodity consumer. The stock's basic resources index shone with a gain of 2.1%, reaching its highest level in nearly 6 months, while the Pan-European equity benchmark was last down about 1%. Over 2% of the gain came from London-listed miners like Glencore Glen and Rio Tinto Rio. Financials also provided support, with Prudential, which is exposed to China, rising 5% to offset losses in the majority of other sectors. After a brief upswing, Vodafone VOD shares fell after the UK company's CEO agreed to step down. Telecoms, which lost 0.8%, did not benefit from the initial jump. Futures on the Euro Stoxx 50, DAX, and FTSE moved close to parity and ended the day 0.1% lower, while U.S. contracts also eased slightly. After additional Chinese cities announced an easing of coronavirus restrictions, the Asian session was buoyant. Both the macro data calendar and corporate news flow in Europe are sparse. However, Vodafone's announcement that finance chief Margherita Della Valle would succeed CEO Nick Reed could garner attention. Following the online German broker's reduction of its guidance, Flatex faces a significant decline among mid-cap stocks. The reopening measures in the world's second-largest economy may finally provide support for stocks that are exposed to China, such as miners. The Fed is out of commission, and the World Cup is getting serious. With the exception of the U.S. ISM Services survey and European retail sales data on Monday and central bank meetings in Canada and Australia later in the week, the calendar for this week is relatively light, allowing traders to concentrate on soccer. The yuan USD-CNY climbed to a high of 7 cents per dollar for the first time in 2.5 months as a result of China's strict COVID-19 curbs. GRAS BRN1 rose 3.5%, boosting the Hang Seng HSI. Positioning suggests that bets against the dollar are still relatively low and even decreased slightly last week. China continues to experience frustration and confusion. Although Beijing has eliminated testing requirements for public transportation, negative results are still required to enter many buildings. Japan and South Korea, Asia's last contenders, face Croatia and Brazil, respectively, on the field. Important developments that may have an impact on markets on Monday. Retail sales in the Eurozone, durable goods orders in the United States, and the ISM non-manufacturing PMI in November. On Monday, concerns about a deeper hit to economic growth were eased by a further loosening of COVID controls in some parts of China. Meanwhile, South Africa's rand rose 1.8% after a week of steep declines due to political uncertainty. China's shares led MSCI's emerging market shares index EFS's 1.4% increase. The Hang Seng Index HSI in Hong Kong rose 4.5% and reached 3-month highs. Central European stock markets also gained. This week's central bank meetings in Brazil, Chile, Poland, and India will be watched. South Africa's Rand hopped in the wake of losing 2.5% last week, while shares in Johannesburg SA40 acquired 1.3%. After a panel of experts found that Ramaphosa may have violated his oath of office due to allegations that he hid large sums of foreign currency that he failed to report as stolen in 2020. Ramaphosa is fighting for his political survival. Ramaphosa has denied any wrongdoing and has been cleared of any wrongdoing. J.P. Morgan's economist said that the allegations come before an ANC conference that is supposed to choose the party's candidate for president in the 2024 general elections. While potential alternative ANC candidates do not significantly differ on policy direction, if there were to be a prolonged political vacuum, uncertainty over the effectiveness of policy and reform implementation would rise. Although the dollar pared some losses on Monday, gold held near the crucial $1,800 level, buoyed by news that China, a major bullion consumer, was easing COVID restrictions. By 09:38 GMT, spot gold had fallen 0.1% to $1,796.17 per ounce, its highest level since July 5 at $1,809.91. At $1,809.20, U.S. gold futures gold were little changed. Earlier in the session, the dollar DXY touched a low that was more than 5 months old. But it has since recovered some of those losses. Gold is less expensive for buyers from overseas when the dollar is weaker. Han Tan, chief market analyst at Exinity, stated, "China's easing of its zero-COVID stance is enabling gold prices to hang on to recent gains. Additionally, positive reinforcements are allowing bullion to remain within touching distance of the psychological $1,800 mark." Market participants anticipate a 91% likelihood of a 50 basis point rate hike at the Fed's meeting this month, according to senior market analyst Matt Simpson of StoneX. This also means that gold demand will rise in the region, which will further support prices. FedWatch. The upcoming U.S. CPI data will have a significant impact on the near-term course of gold. UBS analyst Giovanni Stanovo stated, "We continue to look for further rate hikes to weigh on gold over the coming weeks." On December 13th, the CPI data for November are expected to be released. Spot silver's August 1 elsewhere decreased by 0.7% to $22.955 an ounce, and platinum PL1 increased by 1% to $1,015.15. Palladium XPDUST 1 climbed $1,916.56 by 0.9%. After market sentiment was dampened by U.S. jobs data on Friday that raised fears of persistent inflation, European stock indexes opened slightly lower on Monday, finding little support from an easing of China's domestic pandemic restrictions. Hopes that China's easing of its zero-COVID policy would support global growth and boost commodity demand had boosted Asian shares early on Monday. However, the effect on European business sectors was restricted as financial backers were wary about the degree of the returning, with the MSCI World Value List, which tracks partakes in 47 nations, up only 0.3% on the day ICWI. The Stoxx 600 in Europe was down 1% SXXB, the DAX in Germany was down 4% DAX, and the FTSE 100 in London was up 2% UK 100. Eddie Ching, head of multi-asset portfolio management at Allspring Global Investment, stated, "I think for a period of time we won't know the real definition of zero-COVID because it has been changing and evolving very, very quickly in the last 2 weeks." Ching stated that the recent easing could add to a stronger demand for raw materials, but we also need to see how it evolves. The world's second-largest economy has been heavily impacted by China's zero-COVID policies. In November fell to 6-month lows. The U.S. dollar index was flat at 104.46 DXY, recovering after optimism about China's lockdown easing sent it to 5-month lows earlier in the session. The euro was up 0.2% against the dollar, at around $1.0557 French Central Bank Chief François Villeroy de Galhau said on Sunday that the European Central Bank should raise interest rates by 50 basis points on December 15, bolstering expectations that the ECB will slow the pace of monetary tightening after 2 75 basis point increases. Mike Dolan's outlook on the day ahead in U.S. and global markets. The beginnings of China's COVID-related reopening and a punchy jobs report in the United States appear to be viewed more as positive soft landing signals than additional sticks to rattle central bank cages. Market expectations for the Federal Reserve were undoubtedly not affected by the employment report. Futures still predict that the Fed will downshift its interest rate increases to 50 basis points next week, and the implied terminal rate for next year is still well below 5%. In addition, Wall Street's Fear Index is showing little or no concern for the upcoming month. The implied S&P 500 volatility VIX closed at its lowest level in 8 months on Friday, despite some backtracking today. Obviously outflanked before, notwithstanding some open disarray about the progressions to limitations coming into force on Monday. The blue chips CSI 300 index 399300 gained 2% at the close, while the Hang Seng Index HSI in Hong Kong gained 4.5% to reach its highest level since September 1st. Multiple positive developments alongside a clear path set towards reopening were the reasons why Morgan Stanley upgraded its China equity recommendation to overweight. Anticipates that its COVID-affected Zhengzhou plant will soon resume full production. In onshore and offshore markets, China's yuan USD CNY reached its highest level in nearly 3 months, surpassing 7 to the dollar. Brent crude was around $87 per barrel, up a little on the day but still about where it was at the close on Thursday. In the interim, European bourses and U.S. stock futures remained unchanged or slightly lower. Even though the 2 to 10-year U.S. yield curve version deepened further to more than 80 bps, the most negative in 22 years, U.S. Treasury yields remained mostly stable from Friday's levels. The dollar DXY fell across the board, led primarily by the yuan, and the euro-dollar reached its highest level since June. The final reading of the ISM Service Sector Survey for November tops the economic reports in Monday's U.S. diary. The following are important developments that could guide U.S. markets later on Monday. Participates in a meeting of the African National Congress National Executive Committee regarding allegations that could put his presidency in jeopardy. Eurogroup finance ministers meet in Brussels. Thank you for watching. For more financial news and info, don't forget to hit the like and subscribe buttons.